This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, July 8th, 2016. So the euro looks to have topped out this week at 11.87 and remains pressure to the downside. At this point, the risks are for deeper setbacks back below that 24th of June low, which came in at 109.12. But a break below there will expose more significant medium-term support at 108.23. Only back above 111.87 would take the immediate pressure off the downside. Sterling dollar. So cable is broken down to fresh multi-year lows plus 30-year lows, with the market now potentially considering the next downside extension towards psychological barriers at 125. At this point, though, daily studies are overextended, so we could see a bit of a correction, but the market will need to break back above the weekly high, which comes in around 133.40, to take the immediate pressure off the downside. Dollar yen. So dollar yen, the downtrend here remains firmly intact, with the market now closing in on a retest of that recent multi-month in 2016 low at 98.99. A break below that level will open the door for the next downside extension, potentially back towards next key medium-term support in the 93 area. At this point, a break back above recent highs at 103.40 would be required to take the immediate pressure off the downside. Euro Swiss. So not much going on with Euro Swiss. We did see the other day, or the other week, a spike breakdown that went down to fresh 2016 lows at 106.23. But overall, the market remains very well supported on dips, and there is risk for a resumption of gains back towards recent highs at 111.30, 112. But for now, the market remains confined to a choppy consolidation, with setbacks supported towards 108 and rallies well capped up towards and above 109. Aussie dollar. So the outlook for the Australian dollar remains quite bearish right now, with the market rallying up in recent trade, but the price action is classified as corrective while it remains below 76.47, that high that we saw back on the 24th of June, which could be a lower top. At this point, though, we need to see a break back below initial support, which comes in around 73.05, to confirm or strengthen the bearish outlook and accelerate declines back towards medium-term support at 71.45. Dollar CAD. So dollar CAD continues to show really strong signs of basing. After putting in a 2016 low at 24.61, the market came up and rallied all the way up to 31.89 before coming back down and looking like it wants to put in a higher low at 26.55. At this point, though, we need to see a break back above 31.89 to confirm that outlook and open the door for an acceleration of gains up towards the 135 to 140 area. Any setback should be very well supported ahead of 126.55, with only a break back below that level to compromise the outlook. Kiwi dollar. So Kiwi had recently broken down to lows at 69.63, but then traded all the way up to a 2016 high at 72.97. At this point, since then, we've seen a lot of choppy consolidation, though the market has remained closer to that range high and that 2016 high than back towards the lows. But any rallies are expected to be very well capped on a medium-term basis up towards 73, with additional downside favored. A break back below recent lows at 70, 79, 70, 80 would strengthen this outlook, accelerating declines towards 69.63, next key medium-term support. Back above 72.97 would negate and open the door for fresh upside. SPX 500. So the S&P 500 is trading around 2100, although the market has continued to show signs of stalling out above 2100 in recent trade. But we would need to see a break back below the recent low this week, which came in at 2073, to strengthen the toppish outlook and open the door for an acceleration of declines. A break back above the 2115 area would expose a direct retest of the 2016 peak at 2128, just shy of that record high from 2015 at about 2133. Gold. So gold remains highly constructive, with the market focused on a test of a measured move objective at 1400 over the coming days. At this point, any setback should be very well supported towards 1300, while only back below the 1250 area would really take the immediate pressure off the top side and compromise the highly constructive outlook for this market.